Imagine stepping into a casino with trillions of dollars on the table. A man with striking golden hair walks in and bets all of America's chips on a single move. Tariffs. Is this a genius strategy or a risky gamble that could shake the U.S. economy to its core? Former President Donald Trump initiated one of the largest trade wars in history, imposing tariffs on Canada, Mexico, China, Japan, and the EU. He claimed this was the way to make America great again. But what was the reality? Was it a boost that propelled the U.S. economy forward, or was it a ticking time bomb waiting to explode? Let's analyze. First, the economic goal: reducing the trade deficit. Trump asserted that tariffs were the key to reducing America's massive trade deficit. In theory, when imports become more expensive due to tariffs, consumers would shift to buying domestic products, revitalizing local manufacturing. Sounds logical, but... Second, tariffs, a double-edged sword. In reality, tariffs act as a tax on American consumers. Importing businesses are forced to raise prices to offset the tariffs, making everything more expensive. Some real-world effects. U.S. steel prices surged by 25% after tariffs, driving up car manufacturing costs. By 2019, U.S. businesses had absorbed an estimated $46 billion in additional costs due to tariffs. Imported phones and laptops from China saw an average price increase of 20%. Ultimately, this policy didn't save Americans money. It forced them to pay more for the same products. Third, the national emergency strategy. To bypass legal obstacles, Trump declared a national emergency to impose tariffs without congressional approval. For Mexico and Canada, he cited illegal immigration and drug trafficking. For China, he pointed to fentanyl trafficking. But was this truly the main motivation? Or was it just a cover to push through his economic agenda unchecked? Fourth, unintended consequences. Tariffs didn't just increase domestic prices. They triggered a dangerous chain reaction. Other nations retaliated with their own tariffs, hurting U.S. exports. Instead of bringing manufacturing back to the U.S., companies relocated production to lower-cost countries like Vietnam and India. The trade deficit didn't shrink. It simply shifted from China to other nations. Fifth, alienating allies. It wasn't just China. Trump also imposed tariffs on longtime allies like Canada and the EU. This strained diplomatic relations, eroded trust, and created an opening for China to expand its global influence. When Trump declared America first, many nations began thinking, we need to prioritize ourselves first, too. Counterpoint. Was Trump really wrong? Despite the controversy, some argue that Trump's policies had benefits. Pressuring China. The tariffs forced China to make concessions in trade negotiations. Reducing dependency on China. Companies sought alternative suppliers, decreasing the risk of China manipulating global markets. Protecting the U.S. steel and aluminum industry. Some domestic industries actually benefited from the tariffs. However, were these gains worth the hundreds of billions of dollars in additional costs borne by American consumers and businesses? Conclusion and call to action. Trump's trade war, promoted as a turning point for the U.S. economy, brought far more risks than rewards. It serves as a lesson in economics, diplomacy, and the importance of careful consideration in global trade policies. What do you think? Should the U.S. continue aggressive tariff policies or shift towards freer trade agreements? Did this strategy truly strengthen the U.S. economy, or was it just a high-stakes gamble? Share your thoughts in the comments and join the debate.